Welcome to my channel, World Scope, where the world's quietest moves carry the loudest consequences. Behind every market shift and political headline, there's a deeper game at play. We decode it all, so you don't just watch the news, you understand it. Let's dive in. Japan's big bond sale. Japan sold over $60 billion in U.S. Treasury bonds, a massive move. It wasn't just about economics, it was symbolic. It raised one critical question: why would a close U.S. ally dump American debt? A long economic bond. Japan and the U.S. have long been economic partners. Japan is among the biggest holders of U.S. debt. In return, the U.S. opens its markets and offers security. In 2023, their total trade reached nearly $270 billion, ranging from electronics and cars to aircraft and soybeans. The trigger: tariffs and turbulence. Trump's tariff bombshell created new uncertainty. For Japan, it was a wake-up call. Would more tariffs follow? Would inflation spike? Would the U.S. dollar weaken? At the same time, Japan's own currency, the yen, was under pressure. To stabilize it, Japan had to intervene in foreign exchange markets. And to do that, they sold U.S. dollars and U.S. bonds. Global portfolio shift. This wasn't just Japan acting alone. Across Europe, Canada, and Asia, global investors were rethinking their exposure to U.S. assets. U.S. stocks made up 75% of the global market cap. Foreign investors held a record 18% of all U.S. stocks. Japanese and European pension funds had 60% of their overseas bonds in the U.S. Even small withdrawals could cause big waves. Example, clear and illustrative. Imagine a European pension fund with $50 billion. It decides to cut U.S. exposure by just 5%. That's $2.5 billion gone. Now multiply that by dozens of funds, and suddenly U.S. markets begin to slide. Building concerns. Confidence in U.S. markets was fading. The U.S. had a minus $26 trillion net investment position, meaning it owes far more to the world than it owns. Investor surveys showed record pessimism about U.S. stocks profits in the dollar. Bond yields were rising, making debt more expensive. And perhaps most telling, even U.S. investors were near fully invested. There wasn't much room left to absorb foreign pullbacks. History repeats. This wasn't the first time Japan sold U.S. bonds. In 2022, during a currency crisis, Japan also dumped treasuries to protect the yen. Each time, the world watched and markets reacted. Not just Japan, China watches. To Japan's move may also have sent signals to another major player, China. China, also a huge holder of U.S. debt, has been slowly reducing its holdings for years. If China joins the retreat, the U.S. could face much higher borrowing costs or a loss of control over its own interest rates. The weaponization of finance. In today's world, countries don't always fight with weapons. Sometimes they use money. Selling U.S. bonds is a way to push back, quietly but powerfully. It's called weaponized finance, and it may become the new battleground. At the end, so why did Japan sell U.S. bonds? To defend its currency, to reduce risk, to send a subtle message. The message is this: we are allies, but we're not trapped. If America becomes unpredictable, even friends will walk away. Because in global economics, silence isn't weakness. Sometimes silence is the strongest warning of all. If you found this breakdown insightful, don't forget to like, subscribe, and leave a comment below. Your support helps us decode more of the world's biggest moves, one story at a time. Thanks for watching.